Gold prices slip as central bank turmoil hits No.5 consumer Turkey. Gold prices slipped Monday morning in London, defying last week's expansion in gold ETFs and a bullish turn in hedge funds betting on the metal, as the central bank chief of No.5 gold consumer nation Turkey was replaced with a critic of high interest rates, writes Atsuko Whitehouse at BullionVault. Spot gold prices dipped as much as 1% at the beginning of London trade to touch $1,727 per ounce, pairing most of last week's gains. Gold and especially silver and platinum have all started the week on a sour note in Asia, and without any trigger apart from a slightly stronger dollar due to Turkish currency turmoil, says derivatives platform Saxo Bank's commodity strategist Ole Hansen. Silver prices fell 3% to $25.43 per ounce, pushing the gold-silver ratio of the two former monetary metals up above 67, the highest in 1 month, while platinum dropped 2.5% to $1,168 per ounce. The dollar index, which tracks the greenback against a basket of 6 other major currencies, strengthened as the Turkish lira tumbled as much as 14% following President Recep Tayyip Erdogan sacking the third central bank chief in 2 years. Saturday's removal of Naci Agbal, who helped the lira to be the best-performing emerging market currency of 2021 after having plummeted to a historic low, pushed the country's stock market under intense pressure with the benchmark Borsa Istanbul 100 index sinking more than 9%. The lira had recovered almost a fifth from around 8.58 to the US dollar since Agbal's appointment. And NBSP. The decision came only days after Agbal announced a sharp rise in interest rates to combat rising inflation. Erdogan has now appointed Serhap Kavşioğlu, a ruling party lawmaker who has argued for lower interest rates. Agbal's leadership and the central bank's prudent measures had played a pivotal role in restoring confidence in the lira and Turkish assets, says Ehsan Koman, head of emerging markets research at MUFG Bank in Dubai. There is now a very real chance that Turkey is heading for a messy balance of payments crisis, Jason Tuvey, analyst at Capital Economics, wrote in a note. The slump in Turkey's lira was blamed for pushing European stocks lower Monday morning from last week's one-year high, as concerns over extended anti-COVID lockdowns also hit Germany. The Pan-European Stoxx 600 however pared its 0.5% drop by lunchtime, even as the European Union agreed to sanction China for human rights abuses against the Uyghurs in the country's northwestern Xinjiang province, and NBSP. Longer-term Western world interest rates meantime eased lower, with the 10-year U.S. Treasury rate retreating to 1.68% from its highest levels in 14 months on Friday. The Federal Reserve will provide monetary stimulus for as long as it takes, said Fed Chairman Jerome Powell to The Wall Street Journal. The U.S. economy is set for a strong 2021 as the pandemic recedes, Richmond Fed President Thomas Barkan also said. And while that will push up prices, there's no sign yet that it will deliver unwanted inflation. Powell is scheduled to speak at a BIS conference today as well as to testify before the House of Representatives Financial Services Committee on Tuesday, and before the Senate Banking Committee on Wednesday. And NBSP. Ahead of Monday's price drop, gold-backed ETF trust funds expanded on Friday, snapping an extended run of investor outflows with both the SPDR Gold Trust and the iShares Gold ETF growing in size. iShares Giant Silver ETF Trust meantime continued to shrink Friday however, marking its 6th consecutive weekly liquidation, back to the size of the first Reddit ramp inflow at end January. Hedge funds and other leveraged speculators in COMEX gold futures and options meantime expanded their bullish betting for the first time in 7 weeks on the latest data, and cut their bearish betting as a group for the first time in 3 weeks. Speculators however grew their net bearish betting against silver to the biggest before the Reddit ramp, according to data published by U.S. regulator the Commodities Futures Trading Commission, CFTC.